so just be aware of that. So with that said, I will load up the PowerPoint and our presentation. So as you know, on the invite you got from Kelly at her office, today we're going to be talking about condominium association insurance and the COVID-19 implications. Throughout the presentation, you're going to be hearing us say next a lot, and that's going to be, we're just going to be jumping from slide to slide. When we say next, that just means we're going to the new slide. So you can follow along or pay attention to the screen, whatever is easiest for you. So we'll get this started and lead it off with Erica Joyce, who will tell us a little bit about herself.
Hello, everybody. My name is Erica Joyce. I am with Mid-State Insurance. Thanks for joining us here this evening. I hope you got your desserts and your coffee with you to enjoy this little presentation we're putting on for you today. But a quick little tidbit about myself. I've been in the insurance industry for a little over 10 years now. Mid-State is an independent insurance agency established by Joe LaBarbera, who is still heavily involved with the agency. I am a 2006 graduate of the University of Wisconsin-Milwaukee with a degree in finance, and then licensed in property and casualty. I've also obtained some designations: my accredited advisor in insurance, associate in insurance services, and I am also working towards my certified insurance counselor designation. Next.
Thanks. I'll briefly tell you about myself and my agency. My name is Panczenko. Farmers Insurance was established in 1928. Today, they're one of the country's largest insurers for home, auto, and small business insurance. I had graduated in 1999 with a degree in real estate and property management. I was a condominium high-rise property manager for 12 years. Being one of the first managers in Wisconsin to earn the CMCA and AMS designations through CAI before there was even a Wisconsin chapter. I had purchased my franchise 9 years ago and chosen Farmers because they had the best and most comprehensive condo association business package policy and one of the best rated claims services, and those were both really important to me. For the past 5 years, my agency has been the largest insurer of condo associations in the state. We insure more than 100 communities for just over $3 million a year in annual premium. And then on top of that, we have about 2,500 home and auto customers between Wisconsin and Illinois, and everyone on my staff is fully licensed.
All right, thank you, Jeremy and Erica. Before we get into the portion of the presentation, I just wanted everybody to know, who doesn't know me, that I'm Mike Leach at Prospect Management Company. I'm one of the senior managers, along with Mark Schultz. I've been with Prospect Management now for 8 years and probably another 20 to go from there. So, Mark, if you want to do a quick introduction of yourself as well.
Hi, I'm Mark Schultz. Many of you also know me. I've been with Prospect Management about 5.5 years. I have my CMCA and I'm working towards getting a PCAM like Mike. I'm not quite there yet, but I'll get there someday. And I really enjoy working with all of you and look forward to further work in the future.
All right, thank you, Mark. And now Erica.
You want me to go through the overview, or you want to?
Yeah.
Okay, a little bit about what we're going to talk about today. Like Mike said, we're going to be jumping from person to person, discussing different topics with you. We have property, ordinance or law, general liability, umbrella, workers' comp, crime and fidelity, directors and officers, and a couple other miscellaneous coverages for you today. Next. First off, I want to start with just introducing the Wisconsin state statute. If you don't already know, the Wisconsin state statute states that a condominium association has to maintain full replacement of the value of the property insured, without regards to who owns what in a unit. So to understand that, you kind of learn to understand property coverage next, which is what we'll go into a little bit here. The definition of covered property as it pertains to condominium association. Each condo association insurance policy has a condominium association special coverage form. Each company's form is a little bit different, but they all typically read similar. The definition is defined as buildings, including outdoor fixtures, improvements, and alterations, refrigerators, air conditions, etc. But the most important piece of this form states that any of these types of property contained within a unit, regardless of ownership, if your condominium association agreement requires you to insure it. So the big thing there, that association, those agreements, those bylaws, those declarations, those are going to dictate who covers what in the event of a covered claim. Property coverage for associations always excludes personal property. Next. There are a couple different types of property coverage that fall under the form. First and foremost, we have the building. This is your largest concern for any condo association. You're always going to have the most premium is going to be derived from your building values. So make sure that you know how to properly value those. Agents, as an agent, we can provide cost estimators, but the only 100% true way to get a proper valuation would be to hire a certified appraiser. There's also building ordinance or law coverages, business income and extra expense. Equipment breakdown is always anything sudden or accidental. Wear and tear is always excluded. Water backup coverages, and then deductibles. Next. To go a little bit more involved with ordinance or law coverages, there are always three types of coverages. This can be defined as coverage A, B, and C, or coverage 1, 2, 3. The definitions are posted there for you, but the biggest thing to understand is that coverage A is the full building value. That is the loss to an undamaged portion of the building, meaning if your building suffers a large enough loss and the city steps in and tells you you need to tear it down and start over, you have to listen to the city to be able to rebuild. Your insurance policy does not, unless you have this coverage. So that is a big, important coverage for condo associations. Coverage B is demolition, the cost to demolish the standing portion, and coverage C, any increased cost of construction. So if now you have to meet certain code changes. Next. Associations also have general liability coverage. General liability is coverage for bodily injury, property damage. The biggest coverage there that we see under associations is that bodily injury coverage. You can see there in Wisconsin, we have lots of slips, trips, falls on that ice, snow, and whose fault is it? Typical limits are set at 1 million each occurrence, 2 million general aggregate or a policy year limit. And then you can also obtain higher limits by purchasing an umbrella, which Jeremy will discuss with you. Medical expense is also a general liability coverage. This is provided for good faith. So if someone slips and falls and they have to go to the doctor, sprained an ankle, just wants their medical bills taken care of, medical expense payment can always kick in. Always note that for any of those higher limits of liability to kick in, those $1 million, there has to be negligence on the association's part. Also note that as a condominium unit owner, you are also an owner of the condo association. So you cannot sue, if you sue your condo association, you're basically suing yourself. So typically those claims do not withhold. Next.
The commercial umbrella. The commercial umbrella is a type of liability policy that applies over and above the coverage afforded by the primary general liability policy. The commercial umbrella offers a low-cost way for you to help protect your business or community from large financial or catastrophic losses. The umbrella policy has three primary functions. It's to provide excess limits over scheduled primary business owner's liability, general liability, business auto liability, and employer's liability policies. It drops down the replace coverage once the primary aggregate limits of the liability have been exhausted by claims payments, and it affords broader coverage of some risks and under some circumstances than primary policies after a deductible or a self-insured retention. Just to give you an example, if an association had a $2 million general liability policy and they settle a bodily injury claim for $3 million, the primary policy would pay $2 million, and then the commercial umbrella would pay the remaining $1 million. Next slide, please. The workers' compensation, the first question is, does your community need workers' comp? This is a pretty common question we get asked by board members, and it's somewhat difficult for associations that don't have any employees. Many associations may only have volunteer board members and a professional management company, but the answer is yes, all associations should have workers' comp coverage. The reason's twofold. Associations work frequently with vendors. In the case of workers' comp, it doesn't matter whether the vendors are hired directly by the board or by the management company. The same problem will result if a vendor's employee is injured. A lot of times it's assumed that the vendor or contractor would only be the only one held responsible for their injured employee, but the law still allows an employee to sue the association. It's especially likely if the contractor didn't have the proper work comp coverage in place, leaving the employee really nowhere else to turn. Even in cases where the association and the property manager did their due diligence and required the vendor to prove their work comp insurance status, it could still be problematic if the vendor allowed their insurance to lapse or if they provided falsified information to begin with, which does happen. Even with small jobs like touch-up painting or pulling weeds in a common area, it could turn out to be a dangerous mistake. But having work comp insurance could help cover costs of situations like this. The second reason associations should have work comp coverage is to protect the volunteers and board members doing work on behalf of their community. Otherwise, in most cases, workers' comp only covers paid employees. The second question, what's covered under a workers' comp policy for HOAs? This would include or pay wage benefits for employees or volunteers who are injured. What are the top 3 mistakes HOAs make when it comes to workers' comp? That would be underestimating risks associated with employees of contractors and vendors that you hire, assuming your management company's coverage would protect you, and then the third one being if your association has workers' comp, but that policy doesn't cover volunteers. I'll give you a couple of quick examples. If the association or property manager were to hire a contractor for a project that's supposed to last a couple of weeks, it's a bigger project, say roofing, for example. At the time you sign the contract, the vendor or contractor provides you copies of their proof of insurance, and everything seems good. And then a week or 10 days into the project, one of the contractor's employees falls off of a roof and hurts himself. What the association didn't know is that the contractor didn't pay his insurance premium and that his policy was canceled the day before his employee fell off the roof. So when the employee realizes that his boss didn't have a work comp policy he can file a claim against, what do you think he would do next? He would probably try to come after or sue the association. Or in another case, this is a claim I had last year. A board member was doing some landscaping, some fall cleanup. She was carrying a heavy garbage bag and stepped into a hole or a divot in the lawn and broke her ankle in 2 or 3 different places. In this case, the association's work comp policy paid for her medical bills because she didn't have any personal health insurance, and it also paid for the wages from her being out of work for the 2 or 3 weeks after her surgery. And then with the last question, what's the cost of the work comp coverage? For an employee, or for an association with no employees or payroll, it's typically $900 a year or about $75 a month. And then at the end of your policy term, you'll do what's called an audit. And if you didn't have any employees or payroll during that time, and you didn't use any contractors without their own work comp coverage, then that's another important thing to do, is make sure that all the contractors you use, even if they don't have employees, have their own workers' comp policy. Then after that audit, the association will get a refund of, it's usually $680. So it makes the net cost annually for your coverage only $220. Next slide, please. Okay, the crime, fidelity, and employee dishonesty. So what is crime and fidelity coverage? Who's covered and how much do you need? This is a type of insurance that protects the money the association has in their operating and reserve accounts. It protects your money from things like embezzlement, check fraud, invoice padding or false invoices, computer fraud, wire fraud? Is there a difference between crime and fidelity? But without getting too technical, the difference is in the definition of who is covered. But they all include money being stolen by an employee. In this case, the employee would be a board member or property manager. So for the most part, a fidelity bond is similar with employee theft or employee dishonesty, it's called many times. And then the last question is, how much coverage do you need? A lot of times this is spelled out in your condo docs. If it's not, then the coverage amount should at the minimum be equal to the amount of the funds that are accessible or controlled by the board in your operating and reserve accounts. Another way associations will determine how much coverage they should have for this would be when it comes to FHA financing. If a homeowner is purchasing a new property or refinancing and getting an FHA loan, they require the association to carry enough coverage to cover a total of 3 months of the association's monthly assessments or condo dues, plus the amount of the balance that's in your reserve account. Next slide, please.
Okay, back to me. Directors and officers coverage. This is coverage for the board members. Coverage can be included under your general liability policy, or you can purchase a separate policy just for this coverage. Typically, when you purchase a separate policy, you're going to get a little bit broader coverage always. It's going to cost you a little bit more, but again, you get some of that broader coverage. Key concerns for a directors and officers policy is monetary versus non-monetary claims. Your typical general liability directors and officers policy covers non-monetary claims. When you start to purchase a separate policy, you get some of that monetary coverage included. Also, the duty to defend versus reimbursement. So again, another important thing to take a look at, no directors and officers policy is the same between companies. So you want to take a look at, is your directors and officers policy going to reimburse you for claims, or are they going to defend you and pay those legal fees? Also, under your general liability included directors and officers, typically you don't have the coverage for volunteers or committee members. If you look at putting an insurance committee together, I've seen a lot of architect committees put together. They do not afford coverage under your directors and officers policy. You need to make sure that form is being defined, and that committees is one of those definitions. Next.
Okay, the hired and non-owned auto. Okay, the questions here. What's the definition, and does your association need auto insurance? If you have an automobile that's owned by the association, then of course the answer is yes. If the association doesn't own any automobiles, the answer is still yes. The biggest reason being, what if an employer or volunteer for the association used their own vehicle while doing some work or running some errands for the association and were to get into an accident and injure somebody? The cost of this coverage is relatively inexpensive, and it's really worth having. On average, these coverages together typically cost less than $200 a year for most associations. What are some examples and types of exposures? What if a board member is using their own vehicle to run a deposit to the bank, or if they're going to the property manager's office to drop off some paperwork, running to the hardware store to grab a couple of supplies for the community? What would be a couple of examples when they accidentally rear-ended somebody and injured that person? Then what would happen if that board member's personal lines auto insurance policy didn't cover the claim, or what if that board member didn't have any of their own auto insurance, or their insurance wasn't enough to cover the injuries to that person that was injured? They would more than likely come after and try to sue the association. Next slide, please. When reviewing your condominium association policy, there's some other coverages that you may want to consider that may apply to your community or be available. We didn't have time to go over each of them in detail, but those would be coverages like earthquake coverage, marine coverage, or flood coverage if your community is located on or near a body of water, There's business personal property to cover things like community furniture in a community room or pool area or in their common areas, artwork in the common areas, fitness equipment, tools or other equipment. Another one I forgot to mention or include on the slide would be separate structure coverage or specified property coverage. If you have things like playground equipment or fences or retaining walls, boat slips or docks, even landscaping, trees and plants, or signage in or around the community would be included in some of that separate structure or specified property coverage. Next. Okay, cybersecurity. What is cybersecurity, and why is cybersecurity a must-have for associations, and what makes community associations so attractive to hackers? I'll typically use two words to explain why community associations need cyber insurance. That's motive and opportunity. Motive because associations store valuable and private data that could encourage cyber criminals. Information could be like full names and addresses, bank account numbers, maybe even social security numbers or driver's license numbers, the make and models of homeowners' automobiles, other property values. Then there's the opportunity. A lot of associations that have limited financial resources or little security expertise or a tendency to underestimate cyber risks. How can a community association reduce their cyber risks? You can do that by using strong passwords and then changing them often, creating separate logins for each user or account, updating your antivirus or firewall software. You can limit access to sensitive data. You can add what's called like a two-factor authentications, which would require a login and code to be sent to a cell phone or an email before you can log in. You can train your board members to stay abreast of all the latest cyber threats. What is the cost of this coverage? Well, it's pretty inexpensive. I know on most of our policies it's $35 a year, but on the average, I'm pretty sure it's under $100 a year on most condominium association policies. And just to give you an example of a cyber liability or data breach claim and what that coverage would do for you. Let's just say, for example, a property manager or board member were to lose their laptop or their phone was stolen, and that device had access to sensitive information on it. The coverage would do things like it would give you forensic services to determine if data was accessed or taken out of the system. You would get legal advice as to what notifications are required to give to the homeowners that were potentially affected by the breach. You could get access to consumer credit monitoring services. It may help you pay any fines or penalties that you would get for violation of privacy regulations or other costs associated with notifying all the homeowners of the breach, things like that. Next.
All right. Thank you, Jeremy and Erica. So now that we know what all these policies are, or hopefully a little bit more, there's definitely a lot to take in there. And by all means, if you have questions, please let us know by emailing Kelly after the presentation. But we want to talk about what do you do after you get this information, and how do you review it, and how do you decide who you should contract with for your insurance, whether that's utilizing your homeowners, having firsthand knowledge, how you verify the property value, the coverage types and policies, paying attention to exclusions, and then as well as documenting everything, because that's what we do.
So the first thing to do is to utilize homeowners. You want to identify who will be tasked with reviewing and making suggestions to the board of directors for approval. Definitely consider formation of an insurance committee. You can get homeowners involved and they can be extremely helpful. Usually you would want to have one board member oversee or join that committee to make sure that they stay on track and to keep the rest of the board updated with their progress. You also can just ask homeowners to assist in general. There's very often a homeowner already in your community who works for an insurance company or has firsthand knowledge of insurance processes. So getting your homeowners involved not only helps the board make the correct decisions more easily, but it also helps the homeowners feel like they're making a difference in the community as well. So it's very important to get educated. You want to understand any impacts made by the board's decision regarding which carrier you have insure your association, and stressing that importance to everybody involved. You definitely should ask your insurance agents, your current insurance agents, such as Erica or Jeremy, to help you out with some of these issues and questions, and then any bidding insurance agents as well. From my experience, the insurance agents are always willing to attend a board meeting and talk to the board of directors, or even talk to the owners, set up different presentations with the entire association if need be, that can really help people understand the insurance policies. Next. So how do you determine the property value and confirm it? So there are two main things to consider when you're doing that: the governing document requirements for your association, as well as the state statutory requirements and federal requirements. It's really great to have your insurance committee that you formed review these requirements and fully understand them when they're working on the insurance policy updates. Regardless of what your governing documents require, you have to insure for the full replacement value of the property. This is a Wisconsin state statute requirement that does supersede your governing documents. The board who is responsible for ensuring the property coverage limit is adequate. You definitely want to use help or guidance from your insurance agent or your property management company as well. We have a lot of great knowledge that we can help steer you in the right direction and answer questions you may have for ensuring your coverage limit is adequate. Several things a couple things you can do to ensure that it is that your property value is accurate is to get an appraisal. You want to have this done from an outside company. Again, the property management company can help you figure out who that is, help you get bids for the appraisals and get those in place. Your insurance companies will also do their own appraisals annually, but again, you shouldn't just rely on that. You should have your own outside vendor ensure that those numbers are accurate for your association. You also want to review your building values to determine your current coverage and proposed coverage meets your needs. Next. So there's several ways to get firsthand knowledge to help you with making this decision. Use your network contacts to assist. So if you have homeowners, again, in your association that have firsthand knowledge of the industry, or even friends of yours that may be in the industry, it's really great to have them provide some input and help you understand this better. Again, you can ask your agent to help you as well. Erica or Jeremy are two perfect volunteers to testify how willing they are to help you understand your policies and help you make the right decisions. You can ask your property manager. We see all kinds of different policies and claims throughout our management history, and so we can help guide you with current questions or issues that you may have. It's also really, excuse me, have a car driving by, sorry. It's also really important to reach out to an attorney. They can help you with reviewing your current policy and making sure it fits your needs, as well as updating you on any current laws or changes to the laws that are going on in your state. And it's also really great to reach out to your restoration vendors. They work directly with the insurance companies for any claims and restoration needed at your property, so they have firsthand knowledge on how to deal with those situations and help you to better understand what happens if an emergency does occur where you need to get your insurance company involved. So all of these individuals can shed light on the firsthand knowledge based on their experiences dealing with insurance carriers. Next.
Should unmute myself. Thank you, Mark. So when you do get these proposals and you go out for bid and things, you really do want to understand what types of coverages do you need for your association. There are 4 basic policies that you should always carry. Number 1 is obviously the building package that, as Erica mentioned, includes that general liability. As she mentioned again, the most common is a $1 million per claim, a $2 million aggregate, meaning over the course of that fiscal policy. And you can also do umbrellas, and we'll touch on that here in a minute. And then you also want to ensure that you have the workman's compensation, as Jeremy pointed out, the D&O policy, and then having a crime and or fidelity coverage. And the reason why I put and or with the fidelity is because that's really going to be driven by your governing documents, whether or not you need to pull or secure a fidelity bond. Most of the time, governing documents don't state that. I have seen documents out there that state that you have to have a fidelity bond, 3 times more than your annual your annual operating expense, which can be a very expensive bond to the tune of $500,000+. And there are carriers out there that will write those bonds, but again, majority of the time, you're just getting that crime policy. And then know kind of what additional policies you have based on the exposures that you assume being an association. If you have a fitness room, a pool, a pond, a clubhouse, if you're on a lake or a river that has equipment like piers and power sources and things like that, and if you're in a high rise, just to make sure you're aware of what you need. And the reason I point out the pool and the pond is that if you just go with your building package on your general liability and you have a $1 million per claim or $2 million aggregate, and you have a wrongful death lawsuit, that will easily eclipse that $1 million in coverage you have per claim. And if you don't have an umbrella to give you that additional coverage, you will end up being on the hook for it, and your rest of your policies you have will not provide you coverage. The umbrella coverage isn't too expensive. On average, for about a $5 million umbrella, you're between that $5,000 range. And then when you get a $10 million umbrella, you're in that $5,000 to $7,000 range. And it really, your property dictates whether or not if you need an umbrella. And if you're unsure, you can always ask your agent, your property manager, your attorney, whether or not you should be securing those types of policies. And same with like earthquake insurance. If you live in a high rise, that's where it's really relevant, because believe it or not, if you Google it, Wisconsin is in a seismically active zone. I have no idea how, but we are. But just a little bit of ground movement can cause so much structural damage to those high rises. And if you don't have that earthquake coverage, I can almost assure you your building package is not going to provide you that coverage that you need to repair those structural issues, which would definitely not be inexpensive if it did happen. So after you make sure you have your bids and you have next, as Mark said, so after you have those bids and you made sure you got the policies that you wanted and that were bid on, you want to pay attention to the exclusions. And what the exclusions are basically what you are not covered for. And I highlighted where I think it's really necessary to pay attention to this. And this is more so on the directors and officers, your crime coverage, and your building coverage. And the directors and officers is because it varies greatly from carrier to carrier. There's no uniform, oh, this is what you cover. When you get onto the building side, more or less, the carriers quote the same stuff. They have different enhancements between the two, but they more or less cover the same thing. But the directors and officers varies so much, and you need to be aware, what are you insured? What are you protected for? I mean, you're tasked with running a corporation. How are you protected? And that's where your D&O insurance comes into. So always ask your agents quoting, give me the list of exclusions, and they'll gladly share that with you. Erica and Jeremy will contest. I've asked for their exclusions many of times just to review it so I can further educate my clients on that. And then crime coverage, be aware what isn't included. Does it include employee, contractor, or board member theft, and doesn't necessarily include cyber theft, or do you need to have an additional type of policy? Because every carrier is going to have different coverages, and you just need to be aware of that it's never uniform. And the reason I mentioned the building coverage is just more so understand what you're not covered for. Most carriers are never going to cover for foundation issues or like a flood insurance thing. There are a few that do like a flood dollar limit, but it's very small. And if you're in a floodplain, you're technically dealing with FEMA for flood insurance. And if you do live in a floodplain, that is not cheap, and hopefully you don't. So when it's all done and said, you want to make sure you're documenting everything. So you want to make sure that you document in your minutes that who your committee members are, so they're protected by the policies that the board has. If you don't document who your committee members are, your committee members may not be covered by the policies you have in place to protect you as a board member. And be sure to document all decisions in the minutes with regards to who you decided to go with and who was involved in those decisions. And if you want, you can say how people vote. I don't think that's as necessary so long as what the vote was. 3 yeas, 2 nays, and 1 abstain, whatever it would be. But one thing you want to make sure is that you're not necessarily voting on this via email. I know a lot of us do email votes. I do it a lot with my clients as well. And unless it's something very important, I will not let the board vote via email on it unless we have all board members in agreement, because I could almost assure you your governing documents do not state that you can vote via email, and they'll say something to the effect in your bylaws, usually sections 3 or 4 in your bylaws are going to state that the board can take action outside of a meeting with unanimous consent. So just always keep that in mind in general. And, when it's all done and said, don't be afraid to ask questions. I'm not an insurance expert. I ask tons of questions as a board member. You have so many hats to, put on, but you're not an insurance expert. And don't be afraid to ask a question, because the only thing that's going to happen is you'll end up learning something and you may cause somebody else to learn something too. So that's all I got to say about insurance. So we'll talk about COVID-19 now. And really what we wanted to do with COVID-19 is just kind of do an overview and how this really impacts the association. So, what is an association response and why you should have one, how the federal, state, and local guidelines impact us, and then what liability implications you have in an association, and the best practices that you can share with your unit owners. And I said next.
Thanks, Mike. Having an association response, what does this mean? Just a general response to COVID-19 and how it's being handled by your association. So it is derived through the knowledge that you have on the issue and the response time needed. That comes from being notified when something occurs and then making sure you know how to deal with it at that time. So what should that include? It includes cleaning services, whether that's regular cleaning services or specialty cleaning services provided when you have a COVID-19 issue arise. Reservation policies such as clubhouse usage, making sure that you are doing the cleaning before and after and keeping everybody safe. Safe distancing is a big part of that. And not necessarily just the community spaces, but if you do have significant COVID-19 issues at your property, maybe making reservation for some common areas too, just so that the residents can still utilize those. It also includes commitments to your owners, which is the most important part. You need to make sure that you are doing everything you can to keep your homeowners safe and secure and keeping them in the know as to what is going on. So what do you do if an owner contracts a virus? You need to make sure that you are utilizing this association response in the proper way and updating owners, any vendors who would be on site or in contact with this area that might have been affected, and keeping the board updated, which the management company needs to make sure that we do, as well as the board members as well, or in addition. So ask your attorney to review your association response, make sure that they feel you've done everything you can. It's really helpful to ensure that, or to have that backing by the attorney showing that you are doing everything you can. So if something does come up, the homeowners know that you're really doing a great job for them. Publish information to owners. Don't leave them out. Make sure that they know what's going on and they have as much information as possible, and then update them as the time progresses. So just to keep in mind, when somebody does report that they have a positive case of COVID-19, please note that it is an option, not a requirement for them to tell, for you to tell who they are. So it is private information, and the only time you should ever be disclosing who has it is if that person has given you approval to do that. Next.
All right, thank you, Mark. And to go on to this as well is just be aware of the local, state, and federal implications and how that impact us. Because as we know, recently the state Supreme Court issued a ruling that the governor can't provide or can no longer do requirements. He can only provide guidelines, and it's really fall on to the local health and municipal health departments. And every city is going to be a little different from city to city and county to county. Everybody's a little different. It just depends on what governing body that municipality reports to and what their requirements are going to be. So just be aware and realize that this is a fluid situation that's always going to be moving. As time goes on, we learn more and more and more, and we're going to change accordingly as we learn more and as more facts come out. The biggest thing is always following the federal requirements. I don't honestly believe there are any federal requirements other than guidelines, but that could change. And, unfortunately, we don't really have the option to not do what the federal government tells us to do, or unless you're being directed otherwise by a state or local government entity to do something else, and then the federal government would allow that to exist. So just always have always keep in mind that putting the association first and always doing what's in the best interest of the association. That kind of ties into the whole theme of meeting your fiduciary responsibility to the association, which is always do what's in the association's best interests at all times. And I'm sure if you've been to other seminars with us, you've heard us say that a few times. Next.
I'm coming. Here I am. Okay. COVID-19 and liability implications with the association. So if someone was to contract the virus from common property, is the association legally liable? So with general liability, there has to be bodily injury or property damage. So someone gets sick, bodily injury. Then the association also has to be legally liable for that injury or accident. So there has to be some negligence on the association's part. It has to constitute an occurrence, which is an accident, contracting the virus, but also note that there is an exclusion under the general liability, which is expected and intended injury. Obviously, with this virus, COVID-19, we know that it's out there. We know that it's highly contagious. So would that be a possible exclusion? Something to think about. We haven't really seen anything play out in the courts yet, so we're just kind of here on standby. The policy might have to defend you in these circumstances, but because of that exclusions, there might not be funds available for payout. Always know that best practices to limit the high touch areas gatherings following all the recommendations. In regards to directors and officers, can making a decision, a board making a decision based on non-monetary choices constitute a wrongful act and then trigger your directors and officers policy. Also know the exclusion on the directors and officers policy is bodily injury. So if the board makes a decision to close the pool, this could trigger the policy, but is it a wrongful act? So again, we just don't have enough information out there. There hasn't been enough court cases. There's obviously people filing and things going on, but just nothing has finalized yet. And again, kind of reiterating what Mike says, the board has to make the best decision that is going to be the least amount of liability or injury to the association. Next. Best practices to reduce your risk of liability implications for the association. Knowledge, provide knowledge. Provide knowledge in regards to postings. Mid-State Insurance at our agency, we have access to posters that you can post. Wash your hands, remain 6 feet apart, know what COVID-19 is and know how it's spread. Just inform yourself, inform the people in the association. I'm sure everyone hears about it enough, but again, we want to make sure as the association and the board that we're doing our part to inform the residents. Next. Again, some of those best practices to reduce the risk is going to put together a general safety policy. Something new, there's templates out there, protocols for residents to follow, limit the presence of non-essential volunteers and visitors when possible, clean and disinfect shared areas, allow residents to speak out and voice their opinions or voice their concerns to the board. Ensure residents, again, are informed properly, communicate the safety protocols with everyone in the association, and provide cleaning tools in common shared areas. Next. Again, with Mid-State Insurance, we have multiple resources available that include helping you review your coverages, market capability. We have access to multiple different insurance companies, providing checklists that risk management and that safety training kind of tailors back to this COVID-19. We have documents, we have resources available that we can provide to our insureds in the event that they have questions or concerns. Provide unit owner summaries as well as incident reporting. Next.
Got to unmute myself. I keep forgetting that. So thank you all for attending. Just due to the nature of the webinar, we are going to ask that if you do have any questions or any suggestions how we could improve this, please email Kelly. And then between Mark, myself, and Erica and Jeremy, we'll take a look at the questions. We'll answer them and we'll share them with everybody. Anybody who does ask a question, obviously we'll keep the names anonymous so nobody will know who's asking what. But we hope you've enjoyed this, and hopefully there'll be more of these to come. And again, if you have any suggestions how we can improve it, we're all ears because this is our first go around on this. So it's always fun. But thank you, everybody, and have a great evening. Thank you.
Thank you.
Good job. Thank you.